Hi, Yashika. When do we start?
Good afternoon, ma'am.
Good afternoon.
With your permission, we can start off with the webinar.
Yeah. Sarthak, we can start.
Yes, I think everybody has joined. Shanky is there. You are there. I am there. Uh, Archana ji has joined. Archana ji and
Sir,
Anjali.
Archana ma'am is joining in
Acha,
some
she is
point.
joining. Okay, and I think Anjali ji has also has to join the webinar. Is she joining? Any confirmations?
I'll call her up and take a
Okay.
confirmation. In the meantime, I think we can start with the session.
No issues. No issues.
Yeah.
Yeah.
So I hand over to my colleague, Ms. Lavanya Sharma, to start forward with the session. I request everyone to please start your camera. Thank you so much.
Hi everyone, very good afternoon. I hope I am audible to everyone. So on behalf of BRICS Chamber of Commerce and Industry, I am pleased to welcome you all to this insightful session on the discussion of the 56th GST Council meeting. For those who are new with us, BRICS CCI, we are a non-for-profit organization, non-governmental, representing the interests of entrepreneurs, businesses, and professionals across the BRICS nation. Our mission is to foster dialogue, enable cooperation, and promote industry's best practices across borders. Today's webinar aims to deliberate on matters that shape India's taxation and economic framework. The 56th GST Council meeting, held on September 3rd and 4th in New Delhi, introduced sweeping reforms and aimed at simplifying India's tax structure and reducing consumers' burden. The Council streamlined GST into four broad slabs, namely 0%, 5%, 18%, and 40% for luxury goods, while shifting essentials like milk, medicines, and educational items to either nil or 5% slab. Life and health insurance premium were made fully exempted, while taxes on online gaming and betting were raised to 40%. Structural changes included operationalizing the GST Appellate Tribunal, easing compliances for MSMEs and exporters, and simplifying refund processes. Most changes will take place effect from September 22nd, 2025, marking a significant step toward GST 2.0. Our discussion today will revolve around the similar topics and would also include some of the key terms, including exploring a simpler and more effective GST framework, reviewing slabs and proposed changes for easier compliance, assessing sectoral opportunities, ensuring smooth and business-friendly environment, and finally addressing participants' queries to keep the discussion practical and interactive. We are privileged to have with us an esteemed panel of experts who will share their insights and guide us through these critical deliberations. Before we begin, I would like to request all the participants to kindly switch on their cameras and make this discussion engaging and interactive. I would also like to inform you all that this is a recorded session and we are going live as we begin. Without any further ado, I would like to call Ms. Nidhi Goyal, the Managing Director of Avinav Consulting Private Limited and President BRICS CCI Indirect Tax Vertical, to deliver the opening address and set the tone for today's discussion. Over to you, ma'am.
Yeah, thank you, Lavanya. Good afternoon, everybody, and welcome to today's session. As you all know that we have already now completed 8 years of GST implementation, where there a lot of things which have happened from 2017 till date. And I would say almost every year there has been change and there has been improvement and facilitation for the industry, which has been done by the ministry. So in this 56th meeting, as Lavanya has already mentioned, that there is of course a transformative milestone which has been achieved in indirect tax journey. And as a practitioner, I could say that it's not just the simplification, but there are a lot of issues which industry has been facing have been taken care of in this. And some of the industry sectors which are very critical for a lot of companies are have been taken care of in this GST. And there is of course a rationalization of a tax structure, and then there is new two-tier structures. There are a lot of in sectors which have been strengthened, trade facilitation measures, simplifications, compliance simplifications, and then long-standing ambiguity or maybe litigative matters which have been considered this. So all our speakers are going to touch upon different topics, and I think it will be very interesting session for all of us to have not just the doubts but also to have more clarity on how to do the transitional phase of from changes, whether it's retrospective, whether it is going to be effective their current year, or is it going to be helpful for them in the near future. So all that will be discussed in this, and I'll give now I'll request Sarthak to take it over. Thank you.
A very good afternoon to all the esteemed members, panelists, and participants. Thank you, Nidhi, for the opening remarks for today's session. And thank you, BRICS, for organizing today's webinar. It's always a privilege to be imparting my views on this prestigious platform. So, you all must be aware that the 56 GST Council meeting, which was held last week, has been widely regarded as one of the most path-breaking reforms since GST was introduced in July 2017. So, you all must be aware that the recommendations which have been made by the GST Council have touched on almost every sector of the economy, be it the consumers, businesses, revenues, and all these recommendations appear to be a bold realignment, which is intended to simplify the GST structure. So, a number of recommendations have been made by the GST Council, which includes simplification of the GST structure, wherein the four rate slab has now been reduced to a three-rate tax structure, which includes 5% GST rate that will be applicable on essential items, 18% GST rate, which is the standard rate applicable on most of the goods and services, and the third rate is the 40% GST rate, which is also known as the demerit rate and will be applicable on sin and luxury goods such as tobacco and luxury vehicles. So essential daily items like milk, ghee, butter, paneer, medicines, and even some packaged foods have been exempted or bought under the lower 5% slab rate. Life and health insurance premiums, including family policies, ULIPs, will attract a nil rate of GST, once the notification comes into the picture and rates are made applicable. And household appliances like, such as TVs, refrigerators, ACs have been moved from the 28% GST bracket to the 18% GST bracket. Apart from that, small cars and two-wheelers would now fall under the 18% slab. Only high-end vehicles and luxury bikes would face the highest 40% GST rate. So most rate changes of goods and services would take effect from 22nd September 2025, excluding certain tobacco products, which will be made effective from the date which will be notified. So, in my view, regarding the GST simplification of the tax structure, all these proposals regarding the rate reduction would definitely lower the household expenditure for the common man. Apart from this, simplified GST registration process has been prescribed, wherein a fast-track GST registration system will be rolled out from 1st November 2025, and that will enable automatic registration, GST registration in 3 days for low-risk businesses whose monthly liabilities would not exceed 2.5 lakhs. Apart from that, one of the major recommendations that has been long awaited was the post-sale discount regulations under Section 15. And the same has been now made simplified. And now no pre-agreement is required for giving any post-sale discount. And commercial credit notes will be most likely allowed. And ITC reversals on such discounts which have been passed on through commercial credit notes will be withdrawn. So, it's a huge step which has been made by the GST Council in order to reduce the litigation which has been ongoing since the inception of GST. And the GST Appellate Tribunal will become operational. Appeals can be filed by September this month, and hearings will start by December 2025. It has also been proposed that the backlog appeals will be accepted until 30th June 2026. Apart from this, the GST Appellate Tribunal will also serve as a national appellate authority for advanced rulings. So, in nutshell, the recommendations made in the 56 GST Council meeting represent an important milestone in India's indirect tax landscape. It simplifies the structure, reduces burden on households, boosts industry, specifically the real estate, automobile industry, and ensure an easing compliances for the taxpayers. So to sum up, I would say that this reform is about simplification, relief, growth, and stability. So thank you for the patient listening. With this, I conclude my overview, and we can start the panel discussion.
Thank you so much, sir, for sharing your invaluable insights with us and setting stone for the discussion today. Without any further ado, now I would like to request Ms. Archana Jain, founder Archana Jain and co-convener Indirect Tax Vertical of BRICS CCI, Mr. Pranshu Goyal, partner Ashok Pranshu and co-convener BRICS CCI Direct Tax Vertical, CA Sarthak Garg, partner Garg Manoj and associate and convener BRICS CCI Indirect Tax Vertical, Mr. Shanki Agarwal, partner BMR Legal Advocate and Solicitor, and Ms. Anjali Gupta, partner SPNG and Co., to start today's discussion and elaborate on the government's view behind the steps taken in the 56 GST Council meeting.
Thank you, Lavanya. Let me just take this opportunity and let me begin the discussion. So my question is to Sarthak and Archana ji both. Sarthak, I think there is a lot of news regarding the GST rate changes. In your opinion, why do you think that this change was such a bold move? One. Second, is the highlight, and the question is whether the highlight is the rate change or two slabs, or according to you, the highlight is that overall the tax, the tax rate has come down. So, what according to you makes this change so revolutionary or so bold, in your opinion?
So, thank you, Shanki, and thank you, BRICS, for this wonderful organizing a webinar on this hot topic, which is the topic of the day right now, because all the industrialists or the stakeholders are having this anxious that what exact the impact will be and how the things will be unfolding at the time of notification. So yes, a very valid question. First of all, we have to understand that this rate rationalization was something which was on the what should I say, on the agenda for a quite longer period of time. We had these kind of speculation at many of the occasion whenever there was a council meeting that was scheduled. Because of one of the major impact is the inverted duty structure. Because there has to be a reconciliation between the output tax liability and whatever you are having as an input tax credit. And this inverted duty structure refund is a big what should I say, a big hole in the pocket of the revenue also, because that was a huge amount that was either awarded as refund or which used to become a cost. Like if I talk about capital intensive industries like textile, so they are sitting on the huge pile of input tax credit. And at the end of the day, when they know that they are not able to make utilization of that input tax credit, ultimately it becomes a cost and that has to be transferred to the ultimate customer only. So overall, that was again making somewhere or the other the whole chain of that product more expensive to the ultimate customer. So that is the one rationale behind this rate rationalization, to avoid as much as possible that inverted duty structure, let it be textile, let it be footwear industry or chemical industry or pharma industry. So that has been the major thought process behind this. And with respect to my understanding of the international market scenario, whatever it is, so we have to somewhere or the other handhold our exporters or handhold our manufacturers also, taking into consideration the backslash which we are facing somewhere or other in the global market. So that was the two major, I think, the thought process behind it whole gamut of this rate rationalization. Thank you.
See, one more point that I would like to add on is that in most of the countries where the VAT or GST system is being currently followed, So they only have a single rate for all the goods and services, or a double rate, And when GST was introduced, so we had the four rate tax structure, and a lot of discussions have been made from the last 7 to 8 years that there should be a single rate for all the goods and services. So I think the idea of the government is to gradually reduce the tax structure from four to three, or eventually to one rate structure. So this can be another way of looking at this whole scenario, that yes, eventually after 5 years or 10 years, we might have a single rate for all the goods and services in India. Yeah.
Okay, valid point. I think I would just like to add here that overall, I think because they have reduced the rate, standard rate to 18%, and for the most of the goods it is 5 or 18. Now it is much closer to the international best practices also, because UK also has the same kind of system, and EU also, wherein they have a standard rate and a merit rate, and for some goods they have a demerit rate. So I think this is what has been done here also. Archana ji, do you want to highlight if there are any major highlights as far as services is concerned, the rates on services?
Yes, the major concern for the rate on the services is, yes, one is the hotel industry, where they have announced 5% without ITC. So it is going to be a big challenge, that, and this, how this whole entry is going to unfold, because today we don't have a clarity, because there is itself an ambiguity in this whole industry, whether the reseller model is into existence or no, whether the person or the middleman or the intermediary is eligible for the reselling of the same or no, and whether this ITC, when they put themselves in the shoes of a hotelier, because they are also using the same HSN 9963, then whether this entry restriction of 5% without ITC will be applicable to them or only hotel per se. So this is one of the bigger challenge which I see. Another bigger challenge which I see is with respect to the transportation. Now multimodal has become 18%. So multi-modal becoming 18%, again, indirectly it is going to impact the cost of the commodities only, because again, transportation is a major cost to any of the component today if we take a costing factor. So these are two important things with respect to the services, if I talk about, where there again some consideration is required, because these are going to have a bigger and a larger impact.
See, one thing I would like to discuss over here is regarding the accommodation services. So before the amendment, at the current stage, if the room tariff is less than 7,500, then the hotels were charging 12% GST with ITC, and if the tariff was more than 7,500, so the GST rate is 18% with plus with ITC. So after the amendment, the 12% category has shifted to 5% without ITC. So if you take a small example, supposedly a hotel is charging 7,000 rupees as a tariff. So on 7,000 of rupees, he will charge 5% GST. Right now, I'm not taking into effect the non-availability of ITC. That's a separate thing altogether. But then the total amount would be 7,350, 7,000 plus 5% GST. And supposedly, if the customer takes a extra betting for 1,000 rupees, the amount will shoot up to 8,000 rupees, and therefore 18% GST will have to charge. So the increase in rental is 1,000 rupees in that case, from 7,000 to 8,000. But if you take the tax impact, the tax would be 1440, 18% on 8,000. So effectively, 1,000 rupees is what the hotel will recover, but he will have to pay an additional 1,090 rupees as the tax to the government. You know, so these things have to be factored in. I mean, the rate change, theek hai, 5% without ITC has been prescribed. But logically, if you see, the vendor will not earn, the hotel will not earn ultimately. उनका तो loss ही है ना 90 rupees का in this case, in a very small example. Apart from that, if you don't have any ITC, supposedly some hotels, if their tariff value does not exceed 7,500 rupees, then they will not get any ITC in that case. So वो एक कॉस्टिंग है. दिस इज अनदर एस्पेक्ट जो एक कॉस्टिंग इफेक्ट आएगा वहां पे कि जीएसटी का इनपुट नहीं मिल रहा, देन हाउ थिंग्स विल बिकम चीपर. So this is something that I analyze with respect to accommodation services, that वो रेट इतना अप एंड डाउन करने से एक इफेक्ट काफी ज्यादा इलेबोरेट हो रहा है. Yeah.
So instead of getting a benefit, it may turn other way.
Absolutely, absolutely. I mean, it's a very simple example if you see.
Agreed, agreed.
Yeah.
Okay, so my next question on the same lines is that do you think that this, the simplification of rate structure will lead to ease of compliance and, will reduce classification disputes?
I don't agree on this point.
Okay.
No, because see, the disagreement can happen on anything. So this rate rationalization, again, because see, rate rationalization has been only provided with respect to 4 digit. What about 6 digits and 8 digits? There may be various other rates prescribed within that heading or subheading. So that ambiguity is still going to be there. But yes, as Sarthak has correctly highlighted, the rate rationalization should be so that the ultimate customer should get that benefit. It should not be the other way around. And if I see, even if then there should be a monitoring also, because when you are restricting my ITC, so or you're adding somewhere or the other to my cost, like job work, there is no clarity as of now. Job work has been shooted up to 18% also. So if that job work, if it remain, everything remain the same as it is mentioned in the press release, so my understanding is then job work become 18%. My ultimate product may be of 5%. There may be a reduction of 7% on the tax regime. But what about this additional cost? Will it not be factored in my, again, on my costing aspect also? Though there is a sunset clause for anti-profiteering, but tomorrow there may be some other provision under which I need to suffice that how or why I have not transmitted that 7% clear benefit to the customer, or why I am passing on 5% or 4%, whatever the calculation may be, to my ultimate customer. So all these questions are going to be popping in after this whole regime has been notified or notification has been issued.
So, Shanky, see, your question was that classification disputes will be solved or not. As a tax practitioner, I say no. As Archana ji said, कि वो सब category सब heading में जाओगे, there might be some different rates, and the assessee may misclassify under a wrong or a lower rate, in fact, due to that reason. So, classification disputes may not end by, following the two rates tax structure. Apart from that, I had given the example of hotel industry. So if an hotel is providing both the rooms more than 7,500 and less than 7,500, they will have to reverse proportionate ITC under Rule 42 and 43. So that's an additional compliance. So it is indirectly increasing a burden on the sectors, on the taxpayers, I would say.
Okay, noted. Sarthak, also, it has been announced that the rates will be effective from 22nd September 2025. Now, would you like to give the audience a background as to what are they expected to do till 22nd September? Are there any things which they have to be mindful, like ITC or change of rates or any compliances that you wish to highlight?
See, most of the goods and services rates will be effective from 22nd September, except for tobacco products. So first thing, the queries that every taxpayer is raising is that जो पुराना stock है, the old stock. What about the old stock? उसमें what will be the effective rate? Will we be charging new GST rate, old GST rate because it was purchased prior to 21st September? So, here comes into play Section 14, which talks about the change in rate of tax on goods and services. So, you will have to evaluate Section 14. There are three events in any supply. One is the date of supply, one is the invoice date, third is the payment date. So, you have to follow these three things. And if the two things happen before the rate change till 21st, then you will have to follow the old rate. If two out of these three things happen after 22nd, that is the rate change, then you will have to follow the new rate, in fact. So every assessee must be mindful that whether any supply has been made or payment has been received, but invoice has not been raised. For example, if the payment was received prior to 21st and the supply of service has been made and the invoice will be issued at the month end, so what will be the rate of GST in that case? So as per Section 14, since two events have been occurred before 22nd of September, the GST rate would be the old rate, not the new one. So, things like this have to be worked out before 22nd September so as to ensure that correct rate is being charged by the taxpayers. Yeah.
Archana ji, I also want you to highlight about you have touched upon inverted duty structure. Would you like to enlighten the audience as to what have the government done on the inverted duty structure and whether the changes do address the inverted duty structure under the GST?
My understanding for this rate rationalization is somewhere or the other to eradicate this inverted duty structure, because it is again a pain in their neck. So when my invert are of higher rate, let's say 5, 12, 18, and my outward it's let's say for 5%. So I fall because there will be always an accumulation of unutilized input tax credit, and I fall within the definition of inverted duty structure. So for that, there is a provision of refund. Earlier, there was only with respect to input. Now, after the amendment, now input services has been added. So accordingly, there has been a provision of refund. But again, capital goods are always a challenge. And in textile industry, it is a capital intensive industry because capex is the biggest thing that is there. And so is with pharma industry, so is with manufacturing of shoes industry. So that always is a pain area. And if they are only falling within that ambit of inverted duty structure, so they only have to rely upon this refunds only. So that is the one thing. And this rate rationalization, which to some extent, it will allow them to breathe, have that breathing space because of the reduction of the chain, the rate of the chain of those products. But again, that has to be seen. But now, apart from this rate reduction, now next question comes, because all these things are already, as you have highlighted, that the stock is already lying. If I talk about shoes, so now they have enhanced from 999 to 2,500 rupees. So I have to change my MRP. Everything has to be changed. But now again, the whole impact has to be seen. That whole impact will be with respect to the job work or all other aspect, and then I have to reduce my rates. So yes, these things are going to help. They are going to boost somewhere or the other the what I should say, the consumption should be increasing by this aspect. I am also hoping, because even if you have heard that or you have read that the speech, they are saying that we will be able to earn equally or more than what we are earning even after the rate reduction, because any which ways the demand will be there in the market. So that is the main reason of, and textile industry is going to be benefited a bit, I feel, because now most of their product are going to be in the same line. But if I talk about paper industry, that uncrafted paper has become on 18%. My notebook, exercise book, notebook, or all other writing pads has become exempted. 18% to exempt, or corrugated boxes or other boxes to 5%. So that 18% and 5% again is going to be added, the cost aspect, or again that inverted duty structure has been created. So that's why many representations are there from these kind of industries where they still feel that heat is still there on their industry.
Okay.
So, one thing, uncoated paper and paper board, a lot of imports are made in India from Southeast Asian countries, and this product has been made exempted. So the problem is that currently the import shipments which are about to land on the port before 22nd, what will happen to those? I mean, ideally the importer will be paying IGST in the normal course of business, and from selling such products after 22nd of September. So ideally, he'll be paying 12% and reversing the ITC. So, a lot of taxpayers are evaluating option as to whether to keep such products in the custom bonded warehouse. They're currently evaluating whether keeping there would be cost effective or paying 12% IGST would be cost effective as on date. So, these are the things which have to be planned before 22nd of September, before these
Yes,
rate.
this was a very huge gap. Since 15 August, the same was announced, and 3rd September, the meeting has concluded, and the rate will be effective from 22nd. So there is a gap of more than a month. So
Yeah,
the more than a month gap is where whole of the speculation is there in the business, and that this unrest is something which is really a challenge.
right.
Okay, noted. I would like to add one thing for all the audience members. So yesterday, Legal Metrology Department has issued, in fact, a notification wherein they have allowed that in view of the changes under the GST rates, the dealers or the manufacturers are allowed to put stickers to show the reduced MRP, because under metrology rules, the putting up sticker to change the MRP is not allowed. But for one-time measure, they have allowed it. So all the audience members should be mindful of that. Now coming back to the rate change, and so there is a lot of anxiety and anti under the anti-profiteering provisions, because since the time GST was introduced, there has been
I'll intervene here only, Shanki.
yes.
You have highlighted and you have touched upon a very important aspect. Manufacturer is allowed to do so. What about the stockist?
No,
What
so
about the trader?
no, so what I'm informed, or as per my information, everyone is allowed to. So the
No,
manufacturer
my
stockist,
simple question and my pain area is like I'm taking care of hospitals. Hospital has thousands and thousands of inventory because rates on medicine has been revised. So
yes.
how they are going to cope up with this? And if it is with IPD, OPD, how this segregation has to be taken care of? Because this is something, I mean, overnight they cannot change their systems. So there has to be some mechanism.
Correct. This is exactly the problem which I think a lot of businesses will face. Is
Correct.
that what do they do for the existing stock till 22nd September? What has been already purchased, on which a higher GST has been paid, etc. And so what will be the effect? So you have to, as a small businessman, I think it would be all the more necessary for you to basically look at the existing stock inventory and your supply chain as to what will be the impact on 22nd September on the unsold stock and inventory. So and, and I think all this automobile dealer, just touching upon this, all the automobile dealers are actually facing a big dilemma, because compensation cess has been removed, and they have huge balances of compensation cess on the inventory which they have already purchased. Now on 22nd September, all the compensation cess in all likelihood is going to be useless. And that is why what they've done is that they've already announced a discount. So even today, you have to pay what you will pay on 26th, so that they can at least value some of the inventory.
So two, three things over here, Shanky. See, firstly, where there is a lower rate prescribed. I mean, supposedly a product has been taxed under 5% after 22nd, and it was under 12 or 18%, as the case may be. So yes, in that case, GST liability is there. Tax rate has been prescribed. So obviously, there is no reversal of ITC required in that case. The problem in those cases would be the accumulation of ITC for certain period of time. Working capital issues will arise because till September you have paid 12% duty, yeah, on your purchase, like be it imports or domestic procurement, and these sales will occur gradually within one or couple of months, 3 months. Then the 7% differential will be accumulated for certain period of time. So this issue will be there, but yes, at least the supplier will be able to use the ITC for its outward supply. But the major problem would be where the goods have been made exempted from certain rate of taxes. So in that case, there is a clear provision under Section 18, subsection 4, that ITC will have to be reversed. Yeah. So, so the stock as on 21st September will have to be taken, and all the ITC will have to be reversed as per that provision. Apart from that, capital goods, supposedly capital goods were procured 1 year back. तो उसका भी proportionate ITC आपको reverse करना पड़ेगा, because the life of the capital goods under the GST law is 60 months, and you have only used it for 1 month, 12 months. So proportionate ITC will also have to be reversed for those businesses जिनका 100% exempted में बनने जा रहा है from taxable. So problem would arise in such kind of businesses where the 100% input will have to be reversed. Certain amount of capital goods ITC will have to be reversed also. Yeah.
Okay, very good point.
Yeah, and cess regarding the cess, yes, that's a problem actually. So a lot of motor vehicle dealers are into dilemma that what will happen to cess. So when the notification came, there was a confusion that certain, benefit or certain clarification will be issued, but till date there has been no clarification or notification. So, a lot of automobile dealers have accepted that yes, cess will be a cost to them after 22nd. You can see Krishi Kalyan says and the education says during the transition from GST to service tax to GST, excise to GST, that was not allowed. So I am of the view that cess will become a cost for all the automobile dealers from 22nd of September.
Yes, GST has this history. Earlier, there was no such history. When even education sessions check, when this Krishi Kalyan cess was implemented, then earlier they had allowed one-time transition of this cess because that
Correct, correct.
redundant. But this GST has this history because they have amended the provisional transitional provision, and they have made them out of that applicable duties and rates. So yes, we have seen these kind of things. So let's wait and watch. But I think because that's a huge amount. If I see automobile sector, it's not just a small sector. If I talk about as an economy as a whole, it's a quite exorbitant amount. That must be because the manufacturer has already manufactured, and the
Right.
dealer has already, I mean, has booked the car, or they have already taken out their stock. So it is going to be a good impact on that ledger balance which is lying at their end.
Yes.
Shanky, what is your take with respect to this whole aspect of rate rationalization? How you perceive it? Because you are based where there is handicraft, I suppose. Most of the things are handicrafts and textile and tourism. So this whole aspect of rate rationalization, how you think? Is it going to bring a new thrust to the economy, or how you perceive this whole change?
See, I feel that at least policy wise, the decision is clear. They want to boost the local consumption. They want to, I mean, it is in line with Prime Minister's commitment for vocal for local. And we'll also have to see, what we are currently facing. So, because of the tariff impact by US, one thing was absolutely clear that India would not be able to export as much as it was exporting, except electronics maybe, because on that tariff impact is minimal. But for the other sectors, definitely a boost was required. So in line with that, I think government has done two things. One is to pump the liquidity through the reduction in repo rate, and secondly by reducing the GST so that the things become affordable, and therefore the push would be for domestic consumption as well as manufacture. So I feel that the policy rationale is very clear. We'll have to wait and watch whether this will actually go ahead and boost the consumption. One more thing which we'll have to be, mindful is that GST for a long time was actually exceeding the targets. So, initially target, as you know, in 2021, it was set at 1 lakh crore per month, but now we are sitting at 1.86 lakh CR. So definitely one thing is tax buoyancy in terms of GST. We are way ahead of the target. So I think somewhere, I think the government has thought that, okay, let's balance this. Let's reduce the GST collection, but at least boost the consumption. So I think the policy rationale is clear. Whether it will ultimately be successful or not, we'll have to wait and see.
And what is the take of our panel with respect when we are making something exempt? Because on a lighter note, I say this whole rate rationalization has made my roti kapda makan cheaper. Cement has become cheaper, roti has been exempted, my textile has also been like reduced. But again, some after a certain amount, now they have shifted to 18%. So there is a mixed change. But how you overall you perceive this, that how it is, I mean, should be taken?
See, my view is that, and I'll wait for Sarthak to respond, but my view is that, at least the way I see things, I think there should be no exempt category, or exempt
Only.
category should be very basic necessities, maybe something for agriculture, or maybe like food grains and milk. But other than that, I feel that at least 5% GST should be there, because in all the supplies, if we are moving ahead for a white economy, we don't want to promote cash system, black money, if we want to reduce, then I think having a 5% GST serves better than having no GST. So at least this is my view, that have a rate 5%, which will benefit all. And
Because exemption makes your things more expensive.
yes,
Yeah.
yes,
Because everything will become a cost. And
yes,
setting up a factory or a manufacturing unit, or let's say even something with respect to that particular product, whatever you are incurring will always become a cost. So as you have correctly said, then it will put it through parallel economy. People
absolutely.
would not like to, spend that much on the basic infrastructure because they are not going to get the benefit also. So what is your take, Sarthak, on this?
See, one thing, obviously exempted, there should not be an exempted category. This point, all of us will agree that there is a cascading effect of taxes because of the exemption category. Apart from that, Rule 42, 43 comes into picture. I mean, common ITC reversal. Supposedly, a company is engaged into both taxable as well as exempted products. So their common ITC will have to be reversed. Supposedly, a company has a huge rental ITC, common bucket of ITC. So in that case, ITC will have to be reversed, forming part of the cost. This is one factor that can be decisive for the costing of a product. Secondly, logistics costs have increased. If you see the GTA, Goods Transport Agency rate, freight charges, so now 18% GST will be applicable. So obviously, for a taxable a taxpayer whose suppliers are completely 100% taxable, he will be eligible to get the ITC. But then what about the exempted category? So problem would arise there that indirectly the transportation cost will come into picture, the GST rate increment. So, government is trying its best to narrow down the prices, obviously by lowering the GST rates. But, there are certain indirect factors that may not, instantly, it might not happen. Yeah.
And with all this talked and said, again, we have to be very, very cautious. I would like to, recommend to all the stakeholders that kindly be very, very cautious. Please see the notification, see how the things are being unfolded. Then there are certain aspects where there is no rate change, but only the value. That means taxable value has been changed. So please bear in mind how the things has to be considered, or how the thing has to be taken into consideration for next month's planning, because see, festival is round the corner, and this whole aspect is going to have a big impact in, because festive season is there, the wedding season is there. So this whole thing is going to have a larger impact than what we are perceiving today. This is like my understanding on the rate reduction. If I talk about whether it is apparel, whether it is other things, so it has an impact ultimately, as you have rightly highlighted. Even this small thing which looks like a transportation cost, but ultimately transportation cost is a major cost when it comes
Yeah.
to finalizing the costing of any product.
Correct.
So yes.
Okay. So Archana ji, do you want to touch upon the anti-profiteering law? Because, a lot of questions were raised during the initial period when the GST was imposed. Anti-profiteering law was, activated, and there was a lot of disputes regarding anti-profiteering. Do you think that the businesses are required to pass on the benefits of lower GST to the consumer, or do you think it is fine and there would not be a worry regarding anti-profiteering?
No, though there is a sunset clause, that now that section itself has become redundant, but we have seen this as a history. And even that whole gamut, if you see, even the whole speech or the agenda, there is a rationale behind all these rate reduction, that ultimately the benefit has to be passed on to the ultimate consumer. If that is not been passed on with the right intent, or with the right way, then I think there is going to be some trouble. Today, that provision may not be applicable. But who is stopping the lawmakers to make an amendment in that? They have earlier also made a retrospective amendment. They had made extension for the provision. So it is only merely a technical aspect which can be made applicable. But yes, the intent is that benefit has to be there, or there has to be transferred to the ultimate customer. There is no way out. I don't think so. So that is why my suggestion to my clients is that kindly make a costing, revisit your costing, because there are certain aspects where MRP includes your tax rate. So if today my tax rate is included in my MRP, so accordingly, proportionately, I have to revisit my MRP, and accordingly, I have to revisit my costing aspect. So when I'm doing a reverse calculation, because I'm talking of MRP based, so then I have to see it may not be clear 7%, but it may be like 6.25 or 6.30%, which has to be transmitted, provided there is no addition of any kind of costing. So yes, these things has to be done. And as you have correctly highlighted, that even LM Act has given the provision that how you have to do. But again, there will be an hiccups, because I said that for traders, for the stockists, for the people who are holding that stock and who are not manufacturers or packers, then there is again a ambiguity or a question mark is raised how they are going to pass on, because they don't have the right to change the MRP. But yes, my understanding is this benefit has to be passed on. There is no way out. But I really don't understand when it comes to exemption.
Okay. Noted. Sarthak, do you want to touch upon the changes? They have now given the benefit of exports on intermediary also. Do you want to, just recap the entire controversy and, what is this change all about?
Yeah, so intermediary is not a new subject matter. It has been there since the service tax regime, almost 10 years now since the intermediary was introduced into the service tax law and thereafter carried forward into GST. So the problem with intermediary was that, supposedly intermediary is rendering services to a foreign client, a foreign service recipient. In that scenario, also the tax was to be discharged in spite of the fact that the payment has been received in foreign convertible exchange. Such transaction did not qualify export under the IGST Act, because already a lot of litigation has been taken place into this subject matter since the service tax regime. And the government has made a very positive change. They have recommended to propose the amend the provision section 13, I think subclause 8 B. They will remove the word intermediary from there. They will omit the subsection, and in that scenario, the services will be deemed to be the location of service recipient, and therefore, such transaction would qualify as export. So there would be a 18% benefit that will be available to the exporters apart from the regular ITC. I mean, they will be able to avail the ITC of the inward supplies on exports. So this is one positive change that I felt has been recommended by the GST Council. Apart from that, there have been certain positions that a lot of taxpayers have taken, that there is no RCM on import of services because the intermediary is located outside India. So we have been discussing the outward leg, but what about the inward leg? Amounts paid to foreign commission agents, there was no tax in my view, because commission agent would definitely qualify as an intermediary. So a lot of companies were taking a position that GST should not be paid under RCM because the same would not qualify as import of services. But going forward, in those scenarios also, reverse charge will have to be paid by the Indian service recipient. So a positive change with respect to exports, but altogether, not a very good change for the importers who are paying foreign commissions to foreign parties. Yeah.
So the agreement has to be renegotiated, taking into consideration the Mohit Mineral case, how we can renegotiate our contracts and everything need to be relooked upon. So again, a new opportunity, Shanki. I said, all these changes always bring new opportunity and new avenues. There is nothing
See
but
two,
reduction.
see two opportunities. One would be the refund for intermediary exporters, Second would
That
be,
is really a very, very welcoming change.
yes,
I
it's
mean,
been
more
10
of
years
the,
now.
yes.
Yeah. Mhm.
Even
But
I think the service tax regime also, that was an ambiguity with respect to business auxiliary service and business support services.
Correct,
Whenever
correct,
it
correct.
used to be these kind of scenario, they always used to make it a point because there were like POPS rules. So place of provision of service
Provision.
to be made effective. And again, that was always under the radar of taxation. And same has been carried forward under GST also. So this is again a very, very welcoming change. And I think, yes, most the whole outcome of Dharminder J. Jani, Mumbai triple bench after that split verdict, though that
Yeah.
third bench has given a verdict which was like, I don't know how it has to be interpreted, but now it has made life easier for us.
yes.
So, Shanky, you have done a lot of work in intermediary, I'm aware. So, any point that we both could not touch
Inside
upon, or
trading.
any other value add on this for the audience?
No, so I think it is definitely a welcome step, and I think this is in line with global best practices also. One thing which we'll have to be mindful is that whether the government will make this change a retrospective amendment or will it be a prospective change? Because if it is only a prospective change, that means all the litigation which has been already filed and which is lingering in different high courts across the country, regarding various service providers, whether the services are intermediary or not, that will unfortunately continue. So one thing is, while there is no clarification or any kind of indication whether this is retrospective or prospective, we one that space has to be watched out for. Second is obviously this changes in the act, so therefore this will require a parliamentary process. So we'll have to see whether this change is effective on 22nd September, or will it be, further postponed because of the parliamentary, process to be followed. So these are the two changes which we'll have to be mindful, because a lot of people are of the impression that from 22nd September onwards, the intermediary will get the benefit. But this is subject to the parliamentary process unless they come up with an ordinance. So that is one thing which we'll have to be mindful of.
Absolutely.
Okay, so I just want to touch upon just one last topic, which is the post-sale discount. So, Sarthak, would you like to explain, what is really the change and how it will impact, the sellers and the business people?
There have been multiple issues regarding this post-sale discount. So a lot of companies, big companies, are passing on, are giving post-sale discounts to their wholesaler distributors, and in some of the cases there is an agreement. In some cases there might not be an agreement. So this GST law says, section 15(3), that if the company is providing, if a taxpayer is providing a post-sale discount, so there should be a pre-agreement, agreement which has been entered prior to doing such sales. So this was a precondition that post-sale discount पे GST तभी नहीं होगा, बेनिफिट तभी नहीं मिलेगा, तब मिलेगा तब आपका एग्रीमेंट हुआ है, बिफोर द सेल्स हैव बीन एंटर्ड इनटू. So this is one thing which was bothering the taxpayers. Second thing was non-levy of GST on commercial credit notes, the financial credit notes. So a lot of companies provide post-sale discounts. They issue credit notes, but they don't charge GST. So department has been asking for reversal of ITC, because when the sales purchases were made, ITC was paid and ITC was availed on the purchases. But then what about the post-sale discount credit notes? Should ITC be reversed or not? This is one topic that has gathered a lot of attention from the last 4-5 years. Apart from that, additional consideration paid by the company in the form of post-sale discount. Supposedly there was a price reduction by the company, and a wholesaler was offered 20 rupees price by the company, and adding his margin he has to sell the same for 22. But the company had drastically reduced the price to 15 because the competitor is selling at 15 rupees. So 7% difference that was being paid by the company in the form of forced sale discount, the additional consideration. And the fourth one is the marketing or promotional activities taken by the distributor, incentive in the form of incentive that was being paid. So, this all four things were very contentious, and it was a gray area. And the government has now clarified that yes, there should not be a pre-agreement for post-sale discount. So the supplier can issue a credit note in terms of Section 34, and accordingly, Section 15 and Section 34 will be amended from the date which will be notified. Obviously, when there will be, I would say, from the next financial year when there is budget, then only these changes might be proposed and introduced. And thereafter, few circulars will be issued on these three aspects. The commercial credit notes के ऊपर जो GST नहीं लग के आ रहा, that is one aspect, and the other two also the promotional activities and the marketing activities. So these are the three things which the government will issue a clarification in due course. Yeah.
Okay, I have one last topic to touch with Archana ji, but before that, if audience members have any questions for the panel, please feel free to post it in the chat box, and after this, we will take up those questions. So Archana ji, I just want to touch upon one most important update which has come out of this GST Council, which is the operationalization of GST Appellate Tribunal. So one question to you is, would you like to talk about why it took so much time for the government to operationalize the GST 80 after 8 years? And how do you see this playing out in next 9 to 12 months?
We all are aware of the long ongoing litigation with respect to the constitution of appellate tribunal. Because see, what is the reason of appellate tribunal? It has to be an independent. The panel has to be independent, the bench has to be independent. So that was the whole litigation behind. And now there is a technical member and a judicial member. And the composition is like, it is an independent bench now because they both are not from the same department. So that is the reason for this whole process, it took so long. But now, as it has given a date also, now they have announced the cutoff date. I'm not very sure of how effective that announcement is going to be because the many things are yet to be in place. As of now, only GSTAT is operational, that too in Delhi, because that's the principal bench. And only they are taking up the matter with respect to anti-profiteering. 17 July, when it was made implemented, GST. Today we are sitting in 2025 and 31st December is, if I'm not wrong, the cutoff date. Since then, application has to be filed or the appeal has to be filed. Almost 8 years plus. There was an amnesty scheme just to avoid that backlog so that there should be some kind of easement for the tribunal. But that also because whole aspect was that if I have to pay complete tax and it is a litigative matter or it is a legal aspect or an interpretational issue. Like if I say somebody who is still continuing with the legal fight of 13.8, now they are having some benefit. If somebody would not have fought till now, so they would have ended up in paying. So there may be certain legal aspect. So why my feeling is, though tribunal is going to be effective, tribunal is going to be in place, but they will be overburdened. And I don't know how the things are going to be rolled out because litigation is pending for almost 8+ years. And even if, I mean, they are sitting day in and out, I don't think so for at least another 3 or 4 years, they are able to get rid of this backlog. So yes, my feeling is that there has to be some more thing called amnesty like we had in service tax regime if we really want to avoid certain kind of litigations which are like of a meager issues or where the tax components are not that high or the stakes are not that high, or even for that matter where that interpretational issues can be I mean they can have a broader aspect on those and they can give some relaxation to the taxpayer who are willing to forego the litigation and are willing to make the payment of taxes provided certain rebate is given to them, so that even when my tribunal is coming, so they are not overburdened, so that they should not be just working like a mechanical forum. there has to be, because we all are looking forward for some kind of a relief on the judicial aspect from these judicial forum. And if that is not given to us, then what is the whole purpose behind this aspect of GSTAT or the aspect of tribunal? So my understanding or my suggestion will be, or my way of looking at this will be, that they should be at least giving that breathing space so that they are able to work in that proper manner, and it should not be a mere mechanical forum. And I'm also looking forward. Yes, we are very hopeful that now they must be implementing, or they must be making them operational. So we all, as a professional, should gear up, and we all should now start working on our pending appeals, where we are still waited for years and years that GSTAT should be there. So now finally GSTAT is going to be there, tribunal is going to be there. So better to work upon those pending appeals, and let's start working, filing the appeals over there, and let's start making them operational now. I mean, we should be focusing on how to handle our matters which are pending for almost 8 years now. Shanky, you are on mute.
Okay, I was just saying, sorry, although we have already exceeded the time, but there are a couple of questions from the audience. So I'll just ask one by one. So, do we have any sense of, so one question is from Shubham. He's talking about the renewable energy sector. He is asking how these reforms will affect the renewable energy sector. Do we have any comments on that?
I think rate rationalization per se they are talking. So
Yes, I think so.
I think rate has been reduced on renewable energy panels and solar batteries. So they are going to make more effective, cost effective, because I think this this government, now I should not say new government, this government has focused on renewal and other alternate sources of energy, so that the dependency should not be there only on one source. And because in our country we have all the parameters for solar, for thermal, for wind. So I think that is the reason they are also focusing on more renewable sectors, and they are also helping, as you said, for they have that slogan, local be vocal. So again, they are also here helping out the manufacturers, because we are exporting electricity to our neighboring countries like Myanmar. So this will help again economy to boost. So I'm looking forward that renewable energy sector is going to have a boom, because even hydrogen is coming apart from other green energy sources.
Okay.
So most of the yeah, Shanky, please.
No, I was just asking for your views only.
Yeah. So yeah, the rate has been reduced obviously from 12 to 5% under Chapter 84, where the major renewable energy products are classified. And apart from that, uh, uh, from a 5%, 12% to a 5% will obviously make a 7% difference in the valuation. So for a EPC contract, supposedly the total consideration is 100 rupees. The deemed value of goods is 70%, and the deemed value of services is 30%, prescribed by the CGST rules. So in that case, services का rate तो 18% ही रहेगा, but then goods में आपको 7% का additional benefit मिल जाएगा in fact. So with respect to valuation, combined valuation में जो 7% का एक difference है, that will arise for the renewable energy sector. Yeah.
Taking into consideration the cost aspect, they are like quite exorbitant projects.
Yes. Because EPC is basically a works contract only if you see in renewable energy sector. So in that case, वो 70-30 वाला जो एक mechanism derive किया हुआ है. So in that case, सिर्फ एक services के अंदर तो change नहीं है, but the only change is with respect to goods. Yeah.
Okay. So I have a small comment because I don't have many clients in the renewable energy sector. But really speaking, any rate reduction will definitely help the sector. 5% is already a welcome step. But overall, what I feel is that even reduction of rates on goods and services, other goods and services which go on and become a part of the renewable energy panels and in the entire energy sector, reducing the rates on those goods and services will also go on and help reduce the prices of the prices of the panels as well as the energy. So therefore, I feel that overall, this is a hugely impactful change for the entire sector, especially renewable energy. So we
At
have,
least, at
yes,
least they are not made exempted.
yes. So at least I think they would be able to, get the absorb
Benefit of
the input
ITC.
tax credit
Yeah,
and would be able to supply it at at a minimal 5% rate.
correct.
Again,
So
solar power energy is exempt now.
yes, so the energy is exempt. So yeah, that again, leads to a problem
It
because
is going to help them because their working capital involvement will be reduced.
Yeah,
So their procurement will become more cheaper, so their working capital involvement will be reduced.
same as the real estate sector, because
Correct.
they do not get ITC. So lower downing the rate for cement from 28 to 18, bricks, and all those raw material that is taken into I mean procurement में जो होता है from 12 to 5%, it has been reduced. So at least their costing has will be drastically reduced. ITC तो reverse करना ही है, but at least
Cement from 28 to 18 is a very, very major component
yes,
for this
yes, yes.
industry. And also that they can't buy from unregistered. So 100% buy has to be from registered person only with respect to cement.
Correct.
So yes, this is going to make an impact.
So we have one more question from the panel is that how will these decisions taken by the GST Council will help the government in collecting taxes better? So I
So I
think
think
No, but
the
see, if you see the other partner, it says then what contingency measure are in place if shortfall occurs.
yeah,
No, don't be afraid of government deficit. They are,
so
they are, I mean, they are well trained to handle these kind of deficit. But
yes,
I
so
think this is going because of the boost in the demand, the tax collection is going to be there. And I think when the tax are reduced or they are made cheaper or they are made nearer to the rate, which is an acceptable rate, I think people tend to follow the correct aspect. They tend to avoid the parallel economy because 5% is not going to make a much change in their whole economy of their own business. So in that sense, I feel that tax always collection always increases when rates are reduced.
yes. So I also would like to add here. So one, I think the economic impact, the way the government at least has worked out is that they feel that the maximum impact could be 2 lakh crore rupees and minimum impact would be 48,000 crore rupees, which is, I feel, is a small sum compared to the benefits which they are likely to get. So I'm sure the government has worked out. They're already, as I was mentioning earlier, the government is already collecting more than expected GST, and in last 2 years, they have exceeded the targets. So even if 20,000 crores or 15,000 crore rupees is not collected on month basis, I think it is still a good bargain for the government. Looking at the conditions of exporters and the domestic manufacturers. So I feel that the government has done their bit. Now, if it spurs the demand, and as Archana ji was pointing out, that if the consumption growth is there, then I think that impact will further be very minimal. So I think we should not worry about the contingency, etc. The government has done enough working; they have done their maths and would be able to, ensure that the tax collections are on target. In fact, the tax collections are above the targets in both direct tax as well as indirect tax.
Yes.
So I feel
Budget deficit is not, I mean, it's not widening. The gap is not widening year on year. Rather,
yes,
it's shrinking year on year.
correct. And in fact, while there is the market sentiment was not that great, but really speaking, the domestic demands or the GST collection was very good, and surprisingly very good.
Yeah, rather even looking at the global scenario,
Yes.
we are able to sustain all these kind of hardships. So I think let's hope for the best and let's hope that this gives a new acceleration to the economy and the thrust is rotated so that it keeps on moving and the target which they have set for themselves or the vision which which they have given, these kind of rate reduction should be achieved.
Correct. Correct.
Right.
So, Sarthak, Archana ji, should we conclude the discussion for the day?
Yes, because we can discuss on these topics, I think, for hours and hours. This is, I mean, sensitive issues. But yes, we should be looking and coming back with some different kind of aspect or some are different working on the industry specific very soon. And also wait for the notifications to be announced so that we can bring something more on the platter of bricks to be served to our audience. And I think, yes, today for the day, we should be winding up this session.
Right.
Okay. So, Lavanya, back to you for the closing remarks.
Thank you. Thank you so much, Shanky. So thank you, all the panelists for providing us with so much knowledge and sharing your thought-provoking perspectives with us. As finally we conclude with the webinar, I extend again my sincere appreciation to all the speakers, participants, and the organizing team, of course. The discussion today definitely paved the way for better implementation and compliance and growth under GST Act, I believe. Finally, I would request everyone if you can, quickly just switch on your cameras for a quick picture that has to be taken. A quick picture, please. Archana ma'am, again, I would request you to kindly, sum it up, give it a quick gist, and finally provide us a closing remark about today's discussion.
Thank you so much, Lavanya. Thank you, Sarthak. Thank you, Shanky. And thank you, everybody, for attending this webinar today. And we all should be looking forward for this GST 2.0 version. And we promise to bring you more updates, more industry-specific updates, and whatever the changes are there, which is going to have an impact on your business. So on the BRICS Chamber CCI platform, we are going to be back soon with these remarks. I would like to once again say thank you to the BRICS Chamber and all my co-speakers, panelists, and the participants. Thank you so much.
Thank you. Thank you very much, ma'am. Again, everyone, if you can just quickly switch on your cameras for a quick group picture. In 3, 2, 1. Thank you so much. Thank you, guys.
Thank you.
You can drop in your questions in the chat box if you still have any. You can mail us anything, your feedback, whatever you have, with the registration link that you have registered with. Thank you so much for joining us, guys. Thank you. Have a nice day.
Thank you.